What's going on, everyone? Quite a roller coaster of a day, quite clearly. I alerted some plays in the morning. If you had not sold, all of these plays were up huge at the close, obviously. As you guys also know, I was very, very adamant and very, very staunch on buying extreme dips and extreme fear, right? So the only things that I alerted were these plays here. But then throughout the day, I very, very aggressively bought all of these dips, and they worked out perfectly. I'm very glad that a lot of you guys made profit on these plays as well. And overall, you know, even if you did sell for a loss, it's a good learning opportunity. But I averaged down, and you know, it worked out perfectly. So in today's video, I kind of want to just go over. First, I want to talk about a little bit about my trading journey and talk to you guys a little bit about why I'm very I can trade very well in environments like this. And then we're going to talk about the SPY, the NASDAQ, the IWM, the 30-year bond, and the crypto market. So without further ado, let's start this video. All right, first of all, everything that I say about my TikTok and my Instagram is 100% true. You can always go and verify whatever I'm about to tell you, right? So I've been trading for over 10 years now, right? And I always knew that if I were to decide to start charging and like create a service, etc., blah blah blah, I would be the biggest service, and I would charge like I would have the most customers and everything like that, whatever. But so essentially, in January of 2020, I started TikTok, and within like 3 months or 2 months, I got to 15,000. Yeah, within 2 months, I got to 15,000 followers from zero. And I was one of the first people that started talking about stocks on TikTok. I saw that it was a completely new social media platform. No one was talking about it. And me being, you know, a good investor, just kidding. So me seeing the big opportunity in TikTok, especially as like a social media platform, I started posting on TikTok. And the reason why is because a year prior, I was studying the correlation between the 2-year yield, the 10-year yield, the 1-year yield, in accordance to timing when the recessions would happen. So I made a huge document explaining, based off of the parameters and the time frames and timelines of the past recessions, in accordance to when like a 3-year yield would cross below the 10-year yield, etc., when all of these things happen in conjunction, what the timeline for the next recession would be. So I knew that a recession was around the corner. So essentially, I wrote all of it out, and I got to the point where I got into a time frame of March 2020 to July 2020. That is when the next recession would be. And I got that back in February 2019, somewhere in 2019. And I attribute a lot of it to like a lot of research and everything that I did, especially like there were a lot of people that were also talking about things like this. So I went and dug deeper into it. So it's not just me, obviously. Like I remember Ray Dalio was talking about the correlation between the yields and how it would, you know, affect so basically, like, it was a lot of different people. I'm not just acting like I'm like some genius, right? But I went and dug deep into everything, and I figured out a time frame, and I looked at various different charts, and I found the correlation. So what I did was, one of the reasons why I got really, really big then on TikTok was because, like, so now I have like almost 100,000 followers on TikTok, right? So one of the reasons why I really, really grew on TikTok is because at the end of February, I deliberately started with, and this, so my initial reason for why I even started social media, why I started TikTok, the initial reason was I'm going to grow really, really big, and then I'm going to start charging people for signals, okay? So this was pre-pandemic. So February, I deliberately started with a $480 account, not a $500 account. I started with less than $500. And within 3 weeks, I turned 480 into around 16,000. But then at that point, Robinhood went down, and then I believe Robinhood went down a second time. So what could have been close to 20 something thousand dollars within a month, I only ended up making 7,000. So I still turned 480 into around 7,000, right? But because my money was in Robinhood, and because I wanted to do all of this on Robinhood to show, so my initial plan was I wanted to turn 480 into 100,000, and then use that as like a marketing thing, because no one has ever done it before. None of these guys that, you know, charge and everything, they're not capable of doing that stuff. So even before I even did this, I was making videos and sending it to my friends like, hey, my name is this, and I turned $500 into $100,000 trading stocks. If you guys would like to learn how to do it, click the link in my bio, and da-da-da-da-da. Like, I was like already making jokes about it, and I already knew that I would be able to do it. So, but Robinhood ended up, you know, and the time frame that I set for myself was 6 months. So Robinhood, you know, had the finagles because of the limit downs, and, you know, Robinhood was down twice during March, I believe. So I ended up turning whatever 480 into around 7, right? And then I took 7 out. I took 1 out, and then I transferred everything to TD Ameritrade. So then this is TD Ameritrade, and this is 6,000 right here, right? And then by June, I turned it into 23,500. And then by this time, it was like full on pandemic. People were really, really like sick, and like it was really, really bad. And I like came to the realization, I was like, there's no point of like, I don't want to charge people that are trying to like make money to feed their families. And, you know, like I didn't want to be that person. So I kind of basically just took a step away from social media, and I just focused on myself and my family and just trading whatever, my own money. And I just took a step away from social media. And essentially the main reason why I was on social media to begin with was because I wanted to create a trading service. As you know, I will never charge anyone for anything. I've never charged anyone. If someone can bring proof that I charged anyone for a mentorship or a tutorial of any kind, or any sort of signal, any sort of education, there's no way of finding it, because I never charged anyone for anything. So, yeah, so I took a step away from social media, whatever. And then about like a year and a half ago on Instagram, I would post like my profits for the day. So I was consistently making like a few $1,000s a day. It wasn't like whatever, right? Thank God. This was a year and a half ago, whatever. And since then, I wasn't really posting how much money I've made, right? Because I realized like people's, you know, what is it? Essentially, like, you know how rappers, they say like once you make it, quote unquote, like a lot of people's demeanor towards you and everything changes as well. That's very true. So what I did was I just completely stopped sharing how much money I make. So I wanted to share all of this with you guys, because a lot of you guys don't really know who I am. I'm just some random guy on YouTube talking about my ideas on the stock market. So if I am very extreme about what I'm saying, it's because I've traded and made boatloads of money through the COVID crash. And I could go back and show you guys the documents of my Robinhood account as well, but I don't think that's necessary. You could always go to my TikTok and look at all of my videos during March. You could also just look at all of my profits and losses that I would post on Instagram every single day as well. But yeah, I know what I'm talking about. And I love environments like this because I literally flipped a few $100s into tens of thousands of dollars. So I know what I'm talking about. Anyway, there's a little bit about me. I've never charged anyone for anything. All of the people that you guys love, I doubt, are consistently trading and making money on a daily basis. What they're doing is they're living off of your subscription to them. All right? And just keep that in mind. I've never charged anyone for anything. And this has been my full-time job for years. I consistently make a lot of money. Just because I don't share my P&L, just because I don't share how much money I'm actually making, don't get it twisted. and try to keep it respectful. Like I understand, like, also trading and everything, there's a lot of emotions involved, a lot of egos involved, but I'm nothing but a nice guy, and I understand that people do get emotional at times, but it should never get to a point where you guys become disrespectful. So I hope you guys understand a little bit more about me. Yeah, there's that. So now let's go ahead and talk about what happened in the market today. So number one, the SPY. When the sentiment is the most bearish, that's the best time to become bullish, and always buy extreme fear. What we saw today was a huge capitulation to the downside. Everybody was afraid. Everybody was bearish. Everybody thought that that's it. This is it. All right. But I kept on averaging down. I was probably the only person that alerted calls. And those calls ended up doing really, really well. The reason why is, number one, SPY, first of all, it closed 1, 2, 3 days outside of the lower level of the B band. Even during the COVID crash, the most it's ever been was 4 days. The fourth and into the fifth day, the market bounced very heavily. All right. So what I saw today was 1, 2, 3, 4. We opened and closed. So first of all, we opened outside of the lower level of the B band. I automatically knew that these calls were going to come back and at least retest somewhere near the Bollinger Band. And that's exactly what happened. We came back to 440. We opened at 432. So I was completely fine with holding on to those calls. But because I knew, due to my experience of trading during the COVID crash, I averaged down heavily. But because I didn't want to risk anyone else's portfolio, I didn't alert anything like that. I just stuck to the alerts that I posted in the morning. And I averaged down very heavily. But now, moving forward, 1, 2, 3, 4. This is the fourth day, and we're closing and opened outside of the lower level of the B band once more. This is typically a pretty good chance that we'll continue going on higher. But of course, the level that needs to break for tomorrow first is going to be this trend line here at approximately 442.60. So if 442.60 breaks, then it looks like this was an intermediate bottom, and then we can continue going on up to like 450. But then again, it really depends on earnings, and then it depends on Wednesday's FOMC meeting at 2 o'clock on Wednesday. But overall, when we are this overextended to the downside on the Bollinger Bands, unless there is a macroeconomic change in policy, what usually ends up happening is we do bounce heavily on the fifth day. All right, so this is a really, really beautiful opportunity. This was a really beautiful opportunity to go long. This was an amazing reversal opportunity. When I saw us opening outside of the lower level of the B band that far, it was a give me. Like, I wanted to, thank God I didn't throw my whole portfolio at the morning. But, regardless, the same calls, even if you bought at the morning for the SPY calls, those were up about 40%. So regardless, it was a really good day. So, yeah, these worked out. Now, I think as long as if we break above 442.60, we'll continue on and we'll end up retesting 450. But at this point, it's a bit more risky to hold anything overnight until we get definitive direction from Jerome Powell on Wednesday at 2 o'clock. All right, so there's the analysis on the SPY. Let's go ahead and take a look at the IWM. So the IWM, it basically helped lift the market. So what happened was, the IWM closed outside of the lower level of the B band 1, 2, 3, 4 times. Today was the 5th time, and we opened outside of the lower level. All right. So again, this was a really good opportunity. I saw that the IWM was very overextended to the downside. And because the IWM was also red, it confirmed my bullish bias for the day. Regardless of how far we fall today, irrelevant. Because algorithmically, guys, when things are this overextended to the downside, it is almost, unless there is like a huge war or a huge macroeconomic change in policy, the stocks, the major indices, namely the SPY, QQQ, and IWM, they want to revert back to the mean, especially in history when it is completely almost never happens that the indices fall outside and close outside of the Bollinger Bands for more than 5 times. It is completely, you know, it's a beautiful buying opportunity when we are this overextended to the downside. So what I've been saying has held true, right? So now moving forward, we can see that we closed at a major level of resistance on the IWM at 201.48. We closed technically right above it, right? And again, because the SPY also closed outside, it still closed outside of the lower level of the B band. It didn't even close inside. Okay, so there's still, that shows that there's still more room for a bounce, right? And given if the SPY has more room for a bounce, that means that the IWM has more room for a bounce as well. So as long as we can close above 204, basically, if we can break above 205, then it's going to be pretty fun, because then we get to see 208.76. And then, you know, holding tomorrow night will be pretty interesting. You know, it's going to be really, really interesting to see what Jerome Powell says now, because we've had a huge capitulation to the downside. And if he comes and he acts, if he says like bearish things, basically, then the market is just going to take a tumble to the downside again. So it's going to be really interesting to see what he says. But that's why now I'm sort of not holding as many swings overnight. I averaged down like crazy down here, and I took a lot of profits. But heading into Wednesday, it's most likely going to be bullish in anticipation of what he says. But, you know, at this point, it's really just a 50-50. But, you know, I do think that the market intraday into tomorrow is still going to be bullish because the SPY closed outside of the lower level of the B band. If for some reason we gap down again, then what's going to happen is we can potentially come back and retest within this candle. But it's very, very unlikely that that happens. It usually, retesting the candle or the wick happens on Bitcoin. It doesn't usually happen. When we have a huge candle like this, it doesn't usually get tested. So for example, when we had one on December 3rd, that didn't come back and get tested that next day. When we had one on January 10th, that didn't come back and get tested until, you know, we reversed and didn't break above 473. So this could signal like a intermediate bottom, and we could rally into Wednesday. And it would be even better if we rallied after Jerome Powell's meeting, and everybody that did not want to buy. Essentially, it's going to be really interesting next few days. Are they going to basically make the market look very bearish and essentially fool people into becoming bearish and then rip the market up? It's going to be pretty interesting. We could see that like the only other times that this happened was recently, as like obviously like as like the Fed policies were getting more and more known. We had like a few rebounding up and down days here during December where people thought, oh, we're bullish, and then, oh, we're bearish, bullish, bearish, blah, 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 blah. But then we ended up ultimately breaking up into new all-time highs. And then similarly over here, when we made an inverted head and shoulders, where, you know, both times here and over here, I alerted these bottoms and I was saying, buy the dips, buy the dips, buy the dips. And, you know, we ended up making new all-time highs again. So it's going to be interesting to see if, you know, because again, you know, the whole point of all of this is to create maximum pain to retail investors. And today was a pretty good day of doing that. And yeah, I was speaking for a lot about that. But essentially, the IWM, we need to see if we can close above 205 tomorrow. And then we can continue on higher. But once again, you know, Wednesday's Fed meeting is going to be very important. So there's that for the SPY and the IWM. Let's go ahead and take a look at the 30-year bond, the NASDAQ, and the large tech stocks. All right, Apple, huge downside. It closed right below the 30, or right below the lower level of the Bollinger Band. 3 cents below it, actually. So we can also see that the RSI is still not oversold, which is pretty bearish in the short term. It shows that there is still more room to the downside. On Apple, let's go ahead and take a look at Amazon. Jeez. Amazon is up to almost $200 from its low of the day, and it opened and closed outside of the lower level of the B band. This is showing that there's potential room to the upside, especially given that we closed outside of the lower level of the B band. The MACD is oversold and the RSI is oversold, barely moving upward. This is good. We want to see something like this, right? Before, when something looks very bearish, when we have like a green day, whatever, if the RSI shoots very, very high, we don't want to see that sensitivity in the RSI. We want to see a barely like moving upward very slightly. This is exactly what we want to see. So that's very, very bullish. I like this on Amazon. All right. Microsoft. Microsoft, huge reversal. We were outside of the lower level of the B band. We have earnings tomorrow. So it's going to be very interesting. Just, we're basically flirting with the oversold levels on the RSI. We need to close above 297. But again, I don't really like holding anything through earnings. So it's, it's a 50-50. I don't hold anything through earnings. I'm not really sure how the company is going to do. But since it's a large company, we did close above the 200 simple moving average. If we can close tomorrow above major levels of resistance, it'll be good. But again, it all depends on earnings. So it's kind of irrelevant. Google closed inside the level of the Bollinger Band. And it's oversold on the RSI and barely moving upwards. So this is good, right? The MACD is also oversold, but it closed within it. All right, so it's not as overextended to the downside. And, it doesn't look like it has as much room to the upside as the other stocks. It's only $60 away from resistance, and it could potentially fall back down. It's kind of, what I can see from Google, it's basically like a 50-50. It didn't really reclaim much into this candle either. So it didn't show as much strength as Amazon still didn't really close 50% into it either, but it's way more overextended to the downside, right? But Google closed within the Bollinger Band and still didn't close. So that's showing a lot of weakness actually on Google. All right. So also one of the main reasons why I'm kind of worried about holding tech stocks and tech overnight especially is the weakness in the 30-year bonds. So the 30-year bonds, so obviously the overall market had a huge bounce because we were just algorithmically overextended to the downside, right? But now the 30-year bonds are showing weakness, and that is not good. Obviously, we closed right below the 10 simple moving average and right below this major level of support. So this isn't good. So essentially, what I think would be the most bullish scenario for the market, given the weakness in the 30-year bonds, it's going to sound very, very crazy, but the most bullish scenario for the market is for us to basically bounce into the Fed meeting, right? Get like a nice move upwards. As the Fed, if Jerome Powell says something bearish, whatever, the market falls. And then the bonds, I want to see the bonds really, really, really fall as well. I want it to come down over here. And then what that would potentially do to the SPY, it would go below these lows here. And once we break down below these lows, everyone's going to be super, super bearish again. And that would be the best time. Bears would be happy. Essentially, everyone would get to, cover their shorts. And then people that are still bearish at this point and loading up on puts below this level here would basically lose a lot of money. And then by that point, many people that were trying to buy up here, buy the dips up here, here, and here, most of them, as we broke down below this level of support, they would switch their buys from bullish to bearish, buy puts, and then, get their face ripped up. And then that would give way more steam. All of these contracts, everyone that was short, it would give way more steam to everyone that was buying puts down here. And then it would be an amazing time to go to new all-time highs. And one last hoorah, basically, before the Fed actually starts tightening up their things, their policy and everything in March. So there's a lot that can happen in the next few weeks, and it's just we just have to take it a day at a time at this point. And it's really beautiful and it's really fun, to be honest. So 30-year bond overall showing tons of weakness, not good at all. The top NASDAQ stocks also not showing as much room to the upside, except Amazon. So now let's go ahead and take a look at the NASDAQ. So the NASDAQ obviously came back intraday. It was at 333. 334. And it ended up going all the way up today to 354. So it intraday moved $20. And again, the NASDAQ also opened outside of the lower level of the B band. And I automatically knew that we would come back and retest the Bollinger Band. So I wasn't even worried. I just kept on buying all the dips because of my experience trading during the COVID crash and, you know, various other crashes, 2015, 2018. So, but there's no documented proof of that. But I have documented proof of the COVID crash. But anyway, yeah, so I knew that when everyone is super fearful and bearish, it's the best time to buy. So I bought all of these dips for, you know, February, mid-February, early February, late February, and worked out perfectly. So moving forward, we closed above this level of support at 350.32, right? We closed inside the Bollinger Band. And once again, we closed 1, 2, 3, 4. This would be the fourth day outside at the lower level of the B band. So now moving forward, since the SPY also has room to the upside, we could have another green day. But the main issue right now is the 30-year bond's weakness. So if the 30-year bond shows even more weakness tomorrow, then I do not believe that the NASDAQ will have strength or the SPY will have strength. Maybe the only reason why it will have strength is purely a dead cat bounce due to equities being so overextended to the downside. The other thing is that corporate buyback program has been reinitiated today. So there's been, I think, like $900 billion worth of money that that banks and hedge funds are now allowed to use to buy back. So it was a perfect day for them to be allowed to do this as well, Monday. So when the market was at its lows. So also today was the single biggest volume buying day for the SPY and the NASDAQ. So there's a lot, like in terms of like buying power, there's a lot of reasons why the market can still go on higher. But the 30-year bond is the biggest, you know, it's the biggest factor in my opinion right now. So, you know, essentially if the NASDAQ can break above 355 and then 358, that's when the fun is going to start. And then essentially we're most likely going to touch 362 and then we'll retest this 200 simple moving average. But again, Apple has earnings on Thursday and Microsoft has earnings tomorrow. And this whole week is going to be really important for earnings and the FOMC meeting on Wednesday. So overall, we bought this dip. I still think that there might be some more room to the upside, but now like holding overnight is a bit more scary. Personally, I want us to fall down once again. I want all of the bears that were, I want all of the bears that were essentially buying puts down here to cover and become long. And then I want those people to then like lose a lot of money for the market to fall down lower. And then essentially what I want to see is, you know, obviously I don't want to see us get chopped out, but I want retail to get chopped out so that it'll give enough steam and confidence to banks and hedge funds to really send the market. So the more we chop around and do like disgusting price action, the better it'll be for banks and hedge funds. So, and the worse it'll be for retail. So that's what we're basically looking for. We're looking for maximum pain. Today was a good day of maximum pain, and we caught that pain because we just looked at the overextension to the downside in the Bollinger Bands. Really interesting day, really awesome day, really going to be a very, very, it's going to be a crazy next few days. So make sure to follow me on Twitter. I post everything there completely for free. Make sure to follow me on Instagram and TikTok. I post daily market update videos prior to the market. And yeah, I'd like to maybe start streaming. I might stream on Twitch So definitely go ahead and follow me on Twitter. I'll share the Twitch link with you guys when I do start streaming. So yeah, definitely go ahead and do that. I hope you guys enjoyed today's video. And have an amazing day. Thank you.